All right, welcome to the trading strategy video. My goal is to make this video incredibly comprehensive and go over all of my different thought processes in a concise and consolidated manner. This video is still going to be long, so buckle up, and hopefully you find something new or you're reminded of something that kind of helps your trading. So that's the goal here. The things that I'm showing you right now are things that I've been using a lot these last 6 to 8 months. It's all been stacked up on each other over the years, but it has just been slowly getting dialed and dialed and dialed. I'm not the best trader ever. I will never be the best trader ever. I want to be very clear on that. This is a free video that you're watching on YouTube, so take it all with a grain of salt, right? You got to be able to implement it yourself, back test it yourself, figure out the ideas for yourself, but hopefully the ideas that I present you can kind of morph and turn into your own ideas. That being said, I did make $309,000 over the last 80 trading days using these methods through prop firm payouts. The ones that I used that I pulled out $309,000 from this year so far is Apex. I used 20 of the 50K Apex accounts. You can use code TBM for the best discount always. Right now it's 80% off, so it's 35 bucks and 35 bucks per account. And then I ended up pulling $309,000 out. This video will be using live markets. The market just opened 3 minutes ago. I'm trading the Nasdaq futures. That's where the strategies kind of revolve around. And I will be using this in a live market. This is no back-tested data. This is not like a recap of a market or something like that. These are real live markets right now. Trading on a personal account to showcase how all of this is working. All of these concepts, because it is price over time, right, can be translated into other assets and tickers. Say you trade ES, same concepts, right? I just prefer the Nasdaq futures because of the higher beta, so it moves more than the ES, and it's very scalping friendly. And my ideas that I'm about to be showcasing you typically are pretty scalping heavy. Or at least I like to think so. I'm a day trader at the end of the day, right? But there's kind of levels of day trading. And I would say mine is more scalping because I'm looking for targets of around 10 points. So the markets are open. They opened at 8:30 Central Time. We did have CPI come out this morning. So this is a news day. This is the 7:30 candle, is the CPI candle. How I start my day every day is I come in, I log in, I set up, market opens, and I'm always checking the news. For me, the news that I check is I just use a free service called Financial Juice. So I always come in, I check on Financial Juice to see what news I need to be aware of, and if it will be affecting my trading day. So we had CPI this morning. I know that with CPI, that typically means that we have a pretty interesting trading day. Usually, a lot of times these news candles will have like a big news candle, and then we end up retracing it, which is exactly what happened today. A lot of times it happens at the open, the US Open, 8:30, but we did it basically right afterwards. The next 15-20 minutes, we ended up retracing all of CPI. Other news that I care about that Financial Juice might show is typically the 9 o'clock newses. So like Michigan Sentiment, which comes out Friday at 9 o'clock. That's always a Friday at 9. ISM, which comes out at 8:45. PMI at 9 o'clock. And then the other big one would be FOMC, which is Wednesdays, like the third Wednesday of the month, I think. It's always on a Wednesday at 1 o'clock Central. Both of those I do not trade for, right? I'm totally flat during all of those news events. So that's news trading. Not super exciting there, but it is needed to be talked about in the strategy. The next thing I want to talk about is my 15-minute rule. So my 15-minute rule means I do not trade for the first 15 minutes of the day. So from 8:30 to 8:45, I have 0 trades on. A lot of people ask why, because there's decent volatility in the mornings right around the open. And for me, it's basically that reason. Typically, what I have noticed is that the markets are a little bit unpredictable right off the open. And I like to wait about 15 minutes for the volatility and the kind of weird whiplash action to stop. It allows me to also just kind of be able to see a little bit more into what kind of day we're having. My goal is to be patient, right? My goal is to be smart, and it's to be patient, and it's to take A+ setups. And if I can get more data into my brain without having to be forced to take a trade, or feeling like I need to take a trade, that's typically a good thing. So I always wait the first 15 minutes of the day. This is a personal rule. This is not a prop firm rule or anything like that. It really just stems because I used to trade the first couple minutes, first 2-3 minutes of the day, and I would either be up or down a lot of money right away. And I'd hit my daily loss limit in the first minute or 3 minutes or 5 minutes or whatever. But there's so much more time throughout the rest of the day. I realized, why would I put myself in that position? There's so much more opportunity as the day progresses. Why do I need to be rushed and try and take trades, even if I think they're really good? Even really good trades that we think, the market doesn't always do what we think it's going to do, right? Even if you have an 80% win rate and you're pretty confident on all of your trades, you're still losing 20% of those trades, right? And so to put yourself in a position where you're just done for the day right away is just, I just don't like it. So I wait the first 15 minutes. I always say I'm green lighted to trade at 8:45, meaning I'm good to go. And hopefully I have a little better idea of what potentially could be happening today. Okay, so before we dive into actual trading setups, let's talk about what I'm looking at on my screen here. I use Sierra chart. The reasons I like Sierra chart is it's fast. I like their Denali data feed, and I like the Teton order routing. It's also really, really fast. It's also just incredibly reliable, which I prefer. All of my screens I did not physically set up. I used my head moderator in Discord, created a service called tradingplatformhelp.com. I used that for all of my screens, the custom indicators, etc. It's got like 55 helpful videos. There's a bunch of free videos in there to get you started with Sierra chart. It's like $7 a month. Even if you don't want to pay that, you can still get started with Sierra chart through the free videos. So I do use Sierra chart. The other reason I like them is that they do have a built-in trade copier. And if you are watching and you're not familiar with trade copying, basically with prop firms, you can copy trade prop firm accounts, and it's a very simple process to do on Sierra chart. And basically just, I'm trading one account and it's copying across 10 accounts basically, or 20 accounts. Over here on the left side of my screen is the 5-minute chart. Down here in like the middle bottom of my screen is a 1-minute chart. I have a 30-minute chart up here. I click the 22R tab up on the top left-hand corner, and then I have a 22 range chart. Over here on the right side is my DOM, my depth of market. There's one other thing, which is a daily chart. I do pull up a daily chart pretty often. I always start the day with a daily chart just to kind of see what's going on. So right now we're at all-time highs. We're ripping. There's your daily look, right? So those are my 3 charts. In order of importance, it's really the 5-minute, the 1-minute, and the 22 range is what I'm trading on often. The 30-minute chart up here is really just so I can get some ideas on what happened on the overnight session in different areas. But I'm not actively trading on the 30-minute chart. It's really just so I can get some history that I might not see on the 1-minute chart because it's so zoomed in, and the 5-minute chart, which is also zoomed in. On my charts themselves, each chart has something different. So on the 5-minute chart, this chart over here on the left side, I have VWAP, volume weighted average price, which is the blue line. I have volume profile, which starts at 8:30 a.m. Central Time, so market open, which is the green, yellow, and red lines, as well as the volume histogram over here on the right side. That is the core of my 5-minute chart, is really volume profile and VWAP. Volume profile is very important for me. It's showing me where people are interested. That's it. At the end of the day, the way I view trading is, where are people interested in? Like, what levels are people interested in? How aggressive are they buying, or are they selling at those levels? And can I jump in and play off of the levels that people care about? That's basically trading in a nutshell for me, right? So right now we know that people are interested in 83s because that's where the point of control is. That's where the most volume on the day has been conducted. And right now as well, they're also interested in trading 73 to 91 because that's where 70% of the volume is. When you see value area spread open, 100, 150 points or whatever, and it opens up real big and you see point of control flip to the top, I call that a point of control flip. It means that all of a sudden we had a really nice trendy day up. For instance, say we're trending up and all of a sudden there's a ton of volume at the top. Point of control moves up to the very top of the day after moving up 100 points. It helps you ask the question, why? Why is there that much volume, the most volume on the whole day? Why is it all at the very tippity top of the range? And a lot of times the answer is because we're rotating back down. We are making, like, that is going to be the local high for a little bit, and we're going to make a move to the downside. Now, there are times where we push out of that point of control flip, right? When you make new volume and then you level up again. And that is also very telling. If there's all this volume being conducted at the very, very high of the day, and then they push it even higher, that's an idea of, okay, we're trending, like, we're for real trending, right? We're putting in all this volume and all we're doing is pushing out of it again. Like, I should probably be looking for trend continuation as opposed to a pullback. Now, value area also really respects the prior day value area, which I do mark on my charts. So right now, right here where we're at, there's a blue tab that says YVAH. So Y means yesterday, yesterday's value area high. So I care about yesterday's value area high, and I also care about yesterday's point of control and yesterday's value area low. All three of those things are very important. You'll notice that they basically, all of these concepts just act as like support and resistance for me. I'm looking at them as levels of interest, areas of interest, if you will, where people might respect, you know, yesterday's interest level. The other thing that I do with volume profile, so that's value areas, point of control. The other thing is the volume histogram. And this histogram is just showing, similar to how some people have volume on the bottom by time, I use volume by price. And it's the same thing. Again, it's just showcasing, for instance, all this volume here, of course, just correlates with the point of control in the session. And it's just showcasing how much volume has been conducted as we make moves. And you can kind of see the profile of volume a little bit better. You can use it as support and resistance and see kind of where we're going to accelerate versus not accelerate. So moving on, that is my 5-minute chart, as well as like a very in-depth study on volume profile. VWAP, I use it as a support and resistance on trend days, but the thing that's really key for me is if we open like at 8:30, if we're sitting on VWAP at 8:30, that to me really signifies a choppy day, and it's just a data input that I can use to think, okay, we're probably going to go sideways and chop pretty hard because we opened up right at VWAP. Another thing to note on VWAP, so like right here, you can see that we like pushed it and rejected it pretty nicely. That's a great resistance test of VWAP. If we were to push through really strongly and close, you know, 10, 15 points above VWAP or through VWAP, the odds of continuation there are very, very high. So another way that I use VWAP would be that, to just see kind of the odds of continuation versus kind of rejecting off of it. Looking at the 1-minute chart, I got the same color lines, red and green, although they mean something different. So on the 1-minute chart, the things that I'm looking at are VWAP again, the blue line, same as the 5-minute. I'm looking at what I call initial balance, which is the first hour high and low. So right now, the first hour since 8:30, so it goes from 8:30 to 9:30. And as we make new lows or new highs until 9:30, those lines move, okay? But after 9:30, those lines are set in stone. The gray line is literally just the 50% marker between initial balance high and initial balance low, which I will refer to as IBH and IBL. Now, how do I trade IB? Again, we'll talk about it in a little bit, but initial balance for me is really just areas of interest, just like everything else is areas of interest. If we break out of initial balance high, or if we break out of initial balance low, either way, like true breakouts, whether it's above or below, once it's fully set, so after 9:30, this trading strategy only comes into play after 9:30. But if we break out above, we come back down, we retest it, that's a long entry for me to continue the move. If we break out below, come down and retest it. So like say we come down here at 822, we go down to 815 or 805, and we come back to 822, that would be a short entry. So IB is really a breakout retest trend continuation for me usually. If we are in a true range day, then I would be looking for initial balance to be the parameters of the range as well. Lots of times you'll see that like we reject 02 and we come back down into the middle of the range, or we reject 22 and come back up into the middle of the range. And again, all these things can only really be seen after 9:30. So it's on my charts all day long, but it is calculating from 8:30 to 9:30. If you don't have an initial balance indicator, you can just use an opening range indicator on whatever trading platform you're using and just set it for the first hour of the day. It's the same thing. Other things that I'm watching for on my 1-minute chart will be the depth of market, which is showcased here. If you're familiar with like something like Bookmap or just liquidity, I guess, it's the same idea. All that we're seeing right here is just everything that's on my DOM just visualized by price, okay? So that I don't have to like scroll forever. On my screen right now, I can see 9 points, 69 to 60 of the Nasdaq, but I can see right now that there's a huge order sitting at 31, right? So if I was to scroll down 30 points, I see a 200 order on the buy side there, which I would have not seen if I didn't have like my depth up, right? So I just use this so I can see kind of where the liquidity is sitting, who's interested where, if the buy side or the sell side is more stacked, and I use this on the 1-minute chart. Last thing to talk about here is the 22 range chart. What is a 22 range chart? Most people don't know. A range chart is not time-based. So the other charts, the 5-minute chart, the 1-minute chart, all of those are time-based. On the 22 range, it is not time-based. It is price moved based. So I'm looking for it needs to move 22 ticks of price movement to print a new candle. So 22 ticks from top to bottom. On the 23rd tick, it prints a new candle. Okay. So sometimes if price is moving really fast, like just then, that candle gets printed almost immediately because it's 5.5 points on the Nasdaq. 22 ticks is 5.5 points. There are some times during the overnight session where a candle could be 3 hours long because price is just totally stagnant, not moving at all. Then there are other times where like CPI comes out. We can actually go back and look. Let's see, 7:30. So this is CPI, and you can see price was moving 5.5 points constantly, all within a second. It did all that within a second, you know, 7:30, 01, all of that until 02. For me, it kind of just helps. It helps visualize volatility a little bit. It's also just way back in the day. I think like probably coming up on 6 years ago, I had back tested a strategy I was using at the time with the 22 range chart, and I really liked it. I like the way it moved, and I just am so used to watching the 22 range at this point that I love it. And I love having something that's not time-based. I love having something that's showing, you know, this is the actual moves that are happening. The other thing that I use here specifically on the 22 range chart is called cumulative delta. It is it's down here at the bottom, and it is showing the change in market buying versus market selling. So upticks on delta is showing more market buyers versus more market sellers. Down ticks on delta are showing more market sellers than more market buyers. Okay. So right now, for instance, you can see that we are looking good. There are a lot more market buyers than market sellers. The way that I use delta in relation to the 22 range chart to see how our market buyers affect, like how are they reacting in a trend, right? If delta is going up and price is going up, it's a strong move. If delta's going up and price is going down, a lot of times that's a reversal play. Other things that I use on here would be volume profile again, the histogram. I also use VWAP here, and then VWAP bands. So this is VWAP, same one that's on the 5-minute and the 1-minute chart. And then I have 1, 1.5, 2, and 3 standard deviations to the downside, as well as 1, 1.5, 2, and 3 standard deviations to the upside. On really trendy days, you'll notice that we start bouncing and hanging out in the channels. If we're going sideways, it's not super good, but if on super trendy days, bouncing and hanging in the channels is an interesting play, interesting level of confluence. The last big thing on the chart that I need to be talking about is the depth of market and how do I use it. I want to see what I call magnets. Okay, magnets are just above average sized orders. So right now the orders, active orders around are what, 12, 10, 12 or so. If I scroll up, I can see 45, 42. Those are both above average size. 50, right? Those are above average compared to everything else. If I scroll down, I can see 56 at 41, and then it just got filled out. It's above average, right? And the point in talking about this is that I use what I call magnets. So I'm looking for those above average ones to those big blocks to magnet price in. The market is searching and seeking for liquidity. The goal is to conduct trades. It's to meet buyers and sellers together. If there's a lot of buyers down below, the market will typically get pulled into all of those buyers down below. 832 right now. We got that 200 block that's been sitting there for a while. If there's a ton of sellers above, the market will hunt for all of those sellers. And a lot of times, there we go, it's out now. So a great example of a big block, right? That we just got sucked into. A lot of times you'll see like it get really cleaned out on one side and really heavy on the other. And to me, that typically means the price is going to get pulled into the side with all of the liquidity, right? Because the market wants liquidity. It wants to go find that liquidity. And that's how I use it, is just to find liquidity. Same thing that I'm doing on the 1-minute chart. It's just a little bit more, it's the real version of it, right? Looks like price is trying to make a new low now. And you'll see initial balance. If we do make a new low, initial balance will continue to go lower because it is not yet 930. So that's a rundown on all of my charts. Talking through initial balance, volume profile, delta, 22 range chart, daily chart, and some of the ways that I would look to trade all of those things, as well as levels of interest. Now we're going to actually look for some real examples of all of this, see if we can find some legit trading examples of the strategies that I look at every single day. Another thing that I want to talk about very quickly though, before or while we start looking into strategies, it's one of the big principles, right? You got to be patient. All of trading is about being patient. A lot of people think that trading is just button smashing, clicking buttons, going crazy, right? You got to be patient. You got to be willing to take something when it's there. You got to be willing to take it, right? But being able to be patient and wait for something that you deem as A+ where you feel comfortable getting in is just so important. It's so good for your mental. I like to call it emotional capital, right? I start every day with a full tank usually. As I trade, that tank gets depleted, even on winning trades. And trades that take a long time depleted a lot more than trades that are fast and just run right into my targets. But it's a very important concept here. And if I can take trades that I feel confident in, and sometimes it just doesn't work out, then that's okay. And I can move on from that losing trade very easily, as opposed to me taking a trade that I knew I shouldn't have been in to begin with. I get into it and I take a big losing trade. It's kind of like that drains your emotionals way more, because you're like, why did I even take that? I knew that wasn't good. That wasn't an A+ setup, and I'm paying the price for it. The last thing I want to quickly, not last thing, I keep saying that's not true at all. Another thing I want to quickly touch on while we're kind of waiting for some setups here is that you should be putting in screen time on all of these ideas and testing all of them in a simulated environment. If you don't know what a simulated environment is, you can just Google it. Almost every single platform has it in some capacity. It's either called a simulated environment or it's called paper trading. And it's a risk-free way to do it. You don't have to put in any money. You can just execute. I like to call it the blueprint of trading. Oh, we're really selling off here. I like to call it the blueprint of trading. The blueprint of trading is this. This is like the journey of a trader that I think is the best and most ideal way. You learn about trading, you get started, and you start trading in a simulated environment because there's no money involved. You're totally risk-free. You're not having to put in $10,000 or $20,000 of your own money to start trading. After the simulated environment, there's two different routes you can go. You can go into a prop firm, or you can go into a live account. Any money that you have in your account is 100% at risk. You have to follow the margin requirements of $1,000 per mini contract or whatever you're trading. And if you have a really bad day, you can lose $10,000 immediately, right? The other option is to go into a prop firm, like an online prop firm these days, which is where you go through an evaluation. You pass the evaluation, they give you money to trade with, and then you get to keep that money. And usually it's a profit split involved. The ones that I used that I pulled out $309,000 from this year so far is Apex. I use the 50K accounts and I use 20 of them. So copy trading, like I was talking about earlier, I copy trade them. I use 20 of the 50K Apex accounts. You can use code TBM for the best discount always. Right now it's 80% off, so it's $35 and $35 per account. And then I ended up pulling $309,000 out. And so that's just a way to not have to risk as much money. You're still putting some money at risk because you are having to buy an evaluation and then earn a funded account. You got to prove to them that you're a good trader, but it's a lot less money than risking $20,000 in your own personal account right off the bat. So the journey in the blueprint is go from sim to then a prop firm. And then once you're able to pass evaluations, make some money, then migrate some of that money into a personal account as well. And then operate both a prop firm and a personal account. That's how I think is the best option. And that's what I do as well. And here's the rotation to value area low. We did it. That's a full red to green rotation. Very nice. And now we're at the part where do we continue to keep selling off here, or are we going to, catch a bid around yesterday's value area low? I don't know the answer to that. We'll have to wait and see. I think the last big thing, before we can try and throw in some examples here, is the idea of base hits. And this was really founded from my journey with prop firms with Apex this year. Taking out $309,000 is not an easy task. And the crazy part is that the way that it broke down to was $400 per account. The idea of base hits really was founded here of not looking to swing for the fences. When I'm looking to swing for the fences and get a 100+ point trade, I need to be able to give it a lot of wiggle room typically in order to get that, or have a very low hit rate. And I just don't operate well with that. And so I came up with this idea of base hits, which is, and there's a lot of people doing it now, which is amazing. It's fun to see. But the idea of base hits is to look for 10, 15 points, right? Something that the Nasdaq gives us often, especially right now. We're getting 20, 30 point trades or candles in 1 minute right now, all the time. So a 10-point trade, I would call a base hit. I would definitely call a 5-point trade. But I think it's really ideally, 5 to 15 points. And this, you pair it with the concept of less is more, right? So if I can find 2 10-point trades on the Nasdaq and get $400, and I multiply that out by my 20 accounts, that's $8,000 in a day on my funded accounts, right? And that was like a mind-altering, brain-busting thing for me of 2 10-point trades on the Nasdaq is not that hard to find. $400 a day. Even if you're not copy trading accounts, $400 a day is not terrible. A lot of people think that they need to be making multi-thousands of dollars on a single account, making a 200 points trade or whatever. And it's like, that's just, think about the money Think about how much time you're putting in. Think about the effort that you want into this. And base hits really just kind of lights the way, especially if you're going through prop firms or you're on like an evaluation or a funded account. Base hits save you from trailing drawdowns. It saves you from daily loss limits. And it just is truly in my opinion, a really, really solid framework that can be ingrained into your head and is worth kind of messing around with. I challenge you, if you don't agree, just look at your data and see like what happens when you look at 10-point trades versus like 100-point trades or 50-point trades or whatever you're constantly looking for. I find it hardest whenever I do have like a 50-point trade. I start only looking for those, right? Like I want, you know, that dopamine hit happens and you're looking for the big trades that make a lot of money in one go and you can be done for the day early and things like that. And that's typically when bad things start happening. So just reinforcing the whole idea of like less is more, base hits, patience, right? All three of those concepts are so important. So right now, Delta is down. We're still seeing a lot of sellers. This still looks heavy to me. We're getting a very nice trend day to the downside. No wick test or anything like that. A wick test, I have videos on my channel about a wick test, and we'll probably just throw in the whole segment of the wick test right now to talk about. If you do use tradingplatformhelp.com from Gary, there is an actual wick test indicator that is built in that fires up whenever a true wick test is formed with target, stop loss, and entry all pre-planned in there as well. But here's the wick test segment. Okay, wick test. This is a great example of a wick test. You have, okay, so you have a candle. It's a 3-bar setup, okay? The wick test is a 3-bar setup. Well, a 2-bar setup, 3rd bar execution, okay? If it's 4 bars, it is no longer a true wick test. If you're trading like an untested wick, which we saw here, that's like kind of the principle of a wick test. But for me, the true wick test is it requires 2 bars side by side. You have a bar, closes red, puts in a wick, next bar, full engulfing, okay? Then the 3rd bar, which is where the entry happens. Again, if it's the 4th bar, no longer is a true wick test. The indicator will also fire off for it. If you have a strong engulfing candle, the next bar, what you want to see is a retrace to the prior wick for a bounce off of it. The reason I like it is because it's a very defined setup. For me, entry, prior wick, stop loss, bottom of the engulfing candle, target 1-to-1 or 10 points for me. That is a true wick test. It is a 3-bar setup, 1, 2, 3, right? 3 bar, the 3rd bar being your entry. I know exactly where my stop loss is going to be. You see these on shorts and longs. Ideally, it's in a trend sort of situation. It's the best in that case where it's not, I mean, it's a little rangy, right? Wick tests in the middle of a range are not necessarily the most ideal, but it's very clean. It's a very clean setup. Hopefully that helps. I feel like that's a pretty in-depth explanation of what I'm looking for. Again, you'll see it on different time frames, but I prefer it on the 5-minute. So right now you can see liquidity being a little bit more higher, like a little bit more to the upside. Playing off candle structure off the 1-minute chart, I actually really enjoy. So like if we have like a really nice move to the downside and we have a hammer or something that adds some confluence into like delta being up plus a hammer candle, meaning like we put in a wick and we close out pretty strong, plus delta being pointed in the right direction, plus going into liquidity, that's something I would be interested in taking right now. Also interested though in if we have delta going crazy to the downside, I would be interested in looking at shorts. Another option for shorts would be yesterday's point of control as well as current value area low. Both interesting spots there. We got initial balance getting formed in 1 minute. So again, when initial balance is formed in 1 minute, what I'll be looking for is, are we going to retest it and bounce, or are we going to slap through, retest, and short at 57? And obviously everything I just talked through is seen on my live streams, which happen every day on the channel at market open. All of these examples that I just talked through are seen on the live streams. Just depends on the day, right? On which examples you're going to see. But I did just talk through literally everything that I'm going to be looking for. And so now you can just use what I'm looking for and the concepts behind what I'm looking for and the explanations, and then pair it up with the live examples from the live stream and here on this video to actually pair it all up together. And initial balance is set. So now this red line will no longer move and the green line will no longer move either. This could probably be called a delta divergence. We have price making a new high right now over the last high. So we had a current high and then price making a new high, and we had delta making a new high, and now delta's making a new low, or it's not yet at the current high. This would be on track for me to watch for a delta divergence to potentially fade this move that's currently happening back to the downside. Whenever you see a delta divergence and we just can't get the buyers to match the current move, a lot of times you fade off of it. And then now we're coming into, oh, there we go. We got a big buyer. Big buyer just stepped up into the 720s. So now the question is, are we going to rotate 720, or are we going to continue higher into the 760s, right? 750s, 760s, 50 psych level, 60 yesterday's point of control, current value area low on the session. Feels a little grindy so far. I mean, we had a really nice sell-off of 200 points almost. I mean, literally 200 points, 860 to 660. So having a rotation back up into that 760 for like a 100-point rotation up, 50% retrace on the move makes a lot of sense to me. I think this is a very interesting target to be looking for. But I also think that rotating 720s makes a lot of sense. We're losing a little bit of steam here. There's the rotation off 720s. Could have taken it for 10 points very quickly. I like the downside plays because the trend is down right now, right? And there's a little doji at the top there. That's the price action that I was talking about, really enjoying, like the candles that I've been really enjoying. 22 range is kind of showing a little bit of a trend direction change. We obviously had consolidation, new low, and then we pop the prior high on the consolidation and then consolidate near the highs and then rip it again. That's a little bit of a trend change on the 22 range. A little sketchy still to just be truly anticipating a true trend change after a 200-point drop. But just calling it out, that's what I see on the 22 range. But 22 range changes all the time. It's 5.5 points of movement. So right now we got some sellers coming through. Rejecting the 720s was a nice 20-point rotation, 20+ point rotation so far. Right here is an interesting spot. 75. I think if we snap 75, then IBL is definitely in play, but interesting spot right here for sure. Just a little bit of consolidation, right? And that's like what most of this is. It's just looking for consolidation, looking for those areas of interest, the true support resistance concepts, right? It's just, and look where we're bouncing. So we bounced 75 and it's worth 20 points just immediately. If we have a sell-off period, look for the green candle for the order block and see how we respond there. And we sell off again, and then we start kind of hanging out at the lows. We barely baby tick a low, and then we come up and we hold it. So then if we rip back down, like where did that spot where we barely swept the low and we, you know, ended up? That's where buyers stepped in, right? Buyers stepped in when we barely swept the low on this candle. So at this candle, where are they holding us up? And it's at 75, and you see that we retrace right down into that 75, right into this candle that the buyers stepped up on, and we bid it. Markets are been open for just a little over an hour, haven't taken a trade yet, and that's fine. We had a really big sell-off, and guess what? The market's still moving. If you are feeling FOMO because you didn't get a part of that sell-off, for instance, it's all good. The markets are still moving. We're looking for our base hits, right? There's no world where I would have held this for 200 points to begin with. And once you can kind of realize that and associate that that's the case, it becomes a lot easier to watch these moves and be okay with not catching all of it. Testing the prior high on the 5-minute, or prior open on the 5-minute. Another thing that I really enjoy price action wise is you have a big heavy candle, the next candle comes up, tests the prior open, we sell off of it. So like right now, I'd feel very comfortable, I think, taking an 88 short. We have sellers looking decent. Taking the 88 short to me is top of the range. We obviously have some wicks going on above, but if I get filled, it's the top of the little short-term range, very short-term range. We have delta being heavy. We have initial balance kind of holding us down and sucking us in. Liquidity is fairly split. Didn't quite get the fill there. Missed it by what, point and a half, something like that. Still gonna hold on to it for a second. See how delta's doing. I am filled short one contract. Got a little bit of buyers kind of trying to step up here. Oops. And my point of invalidation would be right around here at the top of the range, right? So at the top of the range is my invalidation point. It's a $155 loser if I get tapped. If I make it down to the bottom of the range, it's a $200 winner. Wicks get run is something I love. So I do think that these wicks will get run. If everybody's getting stopped around the exact same spot or entering around the same spot with similar stop losses because the wicks are very apparent, a lot of times you pop through that, right? But for me, looking for the bottom of the range, looks pretty solid. Don't want to be a dick for a tick. Missed that fill by 2 points. And I'm out. So there you go. There's a 10-pointer. Just trading some price action. It's funny. We talk about all of these crazy strategies and crazy ideas and all the things I'm looking at on my chart. And then it comes down to the execution, right? How can I find a cheap trade? And how can I find a cheap trade that I feel comfortable with? And like we just watched price action move hundreds of points on the Nasdaq, worth thousands and thousands and thousands of dollars, right? And then the one trade that I get into, it ends up having 94. I got in at 90, so about 4 points of drawdown, 4 or 5 points of drawdown. That's like $80 to $100 of drawdown to make 200 bucks. I was risking 155 to make 200. So there's like a ton of different things that I'm utilizing there, and like a lot of different confluence and ideas. But at the end of the day, like trading is pretty simple. It's a red button and a green button. Okay, so here's initial balance low. This is good. Okay, so flush into like 40s, retest into initial balance, I think would be like an interesting play. So like if we flushed into 40, even just past 50, that would be interesting. The key now is, are we going to kind of barely sweep the lows like we just did and catch some bids off of it? Or are we going to power through the lows? No way to know that yet. You can watch Delta to kind of hopefully get an idea. You can watch liquidity to get an idea. Right now we got liquidity down into the 30s or so. We got 50 psych level. Again, I would kind of like to see a candle close, like the 1 minute candle close at like 40 or down into the 40s. And then we push back up into 57 for a short, for initial balance low retest. We're below the 50 now. We're into the 40s. I think at this point I can get away with looking at this. So this will be a retest of initial balance low. One of my favorite setups is a retest of initial balance and then continuation off of it. I like it on the long side even more than the short side. I just prefer to long than short. But that is a initial balance low retest. So we closed below it. We came back, we retested the short of initial balance low, and we are out for 10 points. That's another 10-point winner. That's $400 on the session. 2 10-point winners. These days, that is one of my favorite trades. Initial balance is one of my favorite trades. And base hits. That's all I'm looking for. That was like a borderline no drawdown trade. Yeah, I mean, that was like almost as good of a trade as I can get. That's like my favorite type of trade, is a no drawdown trade. I took 1 tick of drawdown. I got in at 56. I took a tick of drawdown to 25, and then I took 10 points on the winning side. Now I would consider myself, if I was copy trading my prop firm accounts right now, I'd be done for the day. 2 trades, right? 2 trades, done for the day, up 400 bucks. That's what it's all about, is just taking setups that you feel really comfortable in. Initial balance setups just like that one, closing above, or if you're at initial balance high, closing above, or below if you're not at initial balance low, coming in, trading the retest. Love that setup. Love trading little micro ranges like this, honestly, on the 1 minute chart with pretty defined areas of interest, right? And notice how volume has not moved down at all. We've had a 200 plus point, almost 250 point rotation, and volume has not moved at all. Volume has just been stuck. And to me, that just shows that like no one's really interested in getting out of their trades right now. Like continuation is not terrible because there's not a lot of volume being conducted down here. There's not enough people getting out of their trades and back into new ones in order to really like dictate a huge rebound to the upside to me. And that's like me, you know, asking the question, why is there no volume down here? Well, because they probably like their positioning, right? They like the continuation. They like their risk. And that's how I use point of control, right? And then the value area, yesterday's value area high to yesterday's value area low, beautiful rotation, trading delta in order to help execute on these trades. Just overall really solid and solid examples. Obviously the wick test was needed to be added in there, but that's how I trade. If you enjoyed this video and the strategy video, I know it was long, very long, and a lot of information, but I hope the information helped. And yeah, if again, all of the things that are interesting, i.e. tradingplatformhelp.com is linked down below. If you're wanting to get started with Apex, that's linked down below. Good luck on your prop firm journey. Use code TBM for the best discount always. Make sure you subscribe, come hang out in the streams. I'll see you next time. Peace, everybody.